Let me do a quick introduction. My name is Mario. I'm the founder and CEO of Fullerton Markets. I have with me one of the trading legends in the world. His name is Ray Barros. Ray, you want to say hi to everyone?
Hi, everybody. How are you doing?
大家好. Okay, so this session that we are going to be doing, I'm just going to do a very candid interview with Ray. This is my latest book. It's called Secret Conversations with Trading Tycoons. I've written 2 prior books, and this is probably the work that I dare say I enjoyed the most. It has taken me 2 years to complete this. I went around the world quite literally to interview 12 top people, selected them from US, Europe, and Asia. All right, inside there, I have the Warren Buffett of Thailand, Dr. Niwe, who spilled the beans. I have Ray Barros, who spilled his beans in terms of the amount of success he has achieved. So, you know, without further ado, let's just jump straight into it, all right? Now, what's going to happen in this session, we'll do a Q&A with Ray. And if you guys have any questions that you might have that you may want to ask, either myself or Ray, just feel free to either raise your hands later, or I think there's an app where you can type the questions in. We'll pull out some of those questions so that in the short time that we have together, friends, let's add as much value to one another in terms of raising all our standards, all right? So, Ray, without further ado, right, the first question I actually want to ask you, why don't you share with everyone, you had a fascinating career, but you didn't start off as a trader or a fund manager. You were trained as a lawyer. Now, what was that point, what was that inflection point where you're training as a lawyer and you went on to become this big-time fund manager? Walk us through that.
Well, it wasn't quite that. I was a lawyer. I graduated from the University of Sydney in 1970. And I came back to Hong Kong, my wife's Chinese, and my father-in-law was day trading the tail market. And I thought, why not try it? And we traded for about a month. Well, a little bit over a month, 6 weeks. And in that time, I managed to make her a fur coat. And I thought, wow, who wants to be a lawyer? I mean, we have to work 12, 13, 14 hours a day. I can do this, work 2 or 3 hours a day, and I can buy my wife a fur coat. So went back home, sold the legal practice, and proceeded to lose money for the next 7 years.
You lost money for 7 years?
I lost money for 7 years.
But you still stayed on. How was that?
Thanks to my wife.
Okay.
She basically supported me through the time. I kept throwing money out the window, and she kept bringing in the front door. She's a forensic accountant.
Wow. Why would she believe in you so much, bro?
I have no idea. I really don't know. I don't know if the girls today, maybe we should ask the girls in the audience, would you stick with a guy that keeps losing money? We dropped in those days 750,000 Aussie dollars. That'd be about $2 million now.
Did you start making money on the 8th year onwards?
I started in 1987. I think that was more luck than good management. Because what happened was I went short Black Friday.
Okay.
And
in 92?
In 87.
87.
And what happened then was, I don't know if you guys were trading, but Black Friday 87, the market had tanked and then had rallied towards the end of the close, and everybody was saying, wow, this is going to be the biggest rally ever. And of course, the market was down about 20% on Monday, and that's when I closed it off. So I made my first winning year in 87, but as I say, I think it was more luck than good management.
But thereafter, something must have changed, because, friends, when I interviewed Ray, and I hope I get the numbers correct, over a period of about 20 years, he had a compounded annualized return of about 24-25%.
Yeah.
And that is humongous for anyone in the trading world. So if you can, Ray, you know, in just certain short snippets, right, what are some of the keys that you find to trading success? Because I think many of us in the room definitely need all these nuggets of information for us to be making significant money in the financial markets.
Okay, I think there are 2 things that are absolutely essential, and that's self-awareness and self-honesty. One of the problems I think most newbies, we know that 90% of newbies lose money. One of the reasons that's the case is because they don't believe what their trading account's telling them. That's one. And secondly, they keep chasing what I call the holy grail. They're looking for some sort of system that will guarantee a profit every time they trade. And there's no such thing out there. If there were, he'd be the biggest hedge fund manager in the world, you know, without a doubt. So if you want to be successful, you've got to manage your risk and you've got to manage your trade. That's the real key for me. The second thing is you have to accept losses. They're just part of the game. And I believe that there are three types of states that traders go through. You have a flow state. No matter what you do, everything is right. You buy, market goes up. You sell, the market goes down. You put a stop loss in, and it goes within a tick of the stop loss and then goes your way. You're God's gift to the trading world. The other side is the reverse. Everything you do is wrong.
Would that be the ebb state?
The ebb stage,
Okay.
yes. And finally, there's the normal stage, which is where we're at. Most traders get caught up in the flow stage. They think, wow, I'm really good. I can do this. And then when they go to the ebb stage, they lose everything they've made and more. And they never realize that the flow stage is luck. Whatever it is you're doing is in tune with the market. You need to hold a balance to say, okay, I'm in ebb stage or I'm in flow stage. It doesn't matter. It's just another trade in the next 10,000.
Now, is that particular to different traders at different points? Meaning to say, like, let's just say if I am experiencing a flow stage now, would that automatically mean a flow stage for someone else? Or due to his trading psychology or his trading pattern, that could be an ebb stage for him?
I think it's unique to the trader, because even if you have a systematic system, I've seen people trade what's known as systems, mechanical systems, and have different results. So I think this ebb, flow, and natural state belongs to the trader. It's how he handles losses and profits that contribute to the success or failure.
And that's where you mentioned the self-awareness is important.
Yeah.
You've got to understand yourself first.
Yeah.
Walk us through a little bit. You have one of the mantras where you say, know what to do and do what you know. Right? So, I mean, is that all wrapped up in what you term as self-awareness and self-honesty? Talk us through a little bit about that.
Well, trading is one of these games that you can know nothing and make a whole series of winning profits, a series of winning losses. I know one student, for example, she came to me, and when she first started trading, with $2,000 at the end of about 8 weeks, she made $11,000.
2,000 to 11,000.
11,000 in 8 weeks, right?
Okay.
And she thought, wow, I'm really good at this. What I said to her, because you're lucky. We met at someone else's educational course. I said, you're lucky. Make sure you know what you're doing. She didn't know what she was doing. She was just lucky. So the first stage is, think about it this way. If I said to you, come for a heart transplant, I'll be your surgeon, and I've never undertaken a single course in my life, would you come to me? Right? Answer would be, well, maybe you would. But the point is, most professions require some degree of motivation to study and practice and learn the craft. With trading, too many beginners come to the trading world thinking that they don't have to do any work. So
Right.
that's what you need to know. You need to know. But knowing in trading is very different to doing what you know. And the reason I say that is that we are hardwired to move away from pain and towards pleasure. Now, how many people here think that losing is painful? Everybody?
Losing
No one.
is painful.
Losing
Anyone?
is painful. Okay.
Some people like pain, bro.
Well, I was just thinking, a bit masochistic here. The point I'm going to make is that anybody that says that losing is not painful is either in denial or they're not telling me the truth. Everybody treats losing money, no matter how many years you've been trading, as painful. Who wants to lose money? If you're trading a multi-million-dollar fund and you lose $1 million today, you don't think that's painful? Of course it's painful. But you can feel the pain without acting on it. This is the key.
You can feel the pain without acting on it.
Exactly. Because what happens when you start, you have a predetermined point called stop losses. You have a stop loss in the marketplace. Too many newbie traders will move the stop loss if it gets too close. There's a saying, I have a saying among my students, cancel if close. If it gets close to my stop loss, I'm going to cancel. And we had one lady that had taken a dollar short, so an Aussie short, around, I think, 43 cents, and rode it as it rallied until she lost her whole account. And that happens too often. And the reason for that is we treat losing as pain, and we act on that pain. So we want to avoid the pain, we cancel the stop loss. We keep postponing taking the loss. My belief is that if you want to succeed in the market, you want to minimize the losses as much as you can, and obviously maximize your profits. if I had a slide, I'd show this to you if you're taking notes. The best formula you can remember is your positive expectancy. Average dollar win multiplied by the win rate minus average dollar loss multiplied by the loss rate must be positive. My father-in-law that started me on this game had a 90% win rate. Think about that for a moment. I mean, and this is true because I used to do his books. A 90% win rate. Do you know how many years he was trading for 10 years? Do you know how many years he made money in those 10 years? Just think about it. If you have a 90% win rate, how many years do you think he'd be making money? 0. He never made any money in those 10 years. The reason being his losses, theoretically, let's put it in simple terms, would be $100 and his profits would be 1.
Yeah.
So when you apply the formula, his positive expectancy was always negative.
So it was negative expectancy.
Negative expectancy.
Okay, let me switch it up a little bit. In terms of, now you had an outstanding run in 20 years. It's written in the book, so I can possibly share with our friends here. You turned 20 million to how much again?
943, but over 1990 to 2010.
Okay.
Right, so it's not exactly yesterday, yeah? Got to be careful with that.
So if I'm gonna, I mean, I'm sure this is in the minds of everyone. You turned 20 million to almost $1 billion.
Yeah.
How, bro? Give us 2 things. Yes, I know you talk about positive expectancy, you talk about self-awareness, 2 nuggets of information that the crowd can go back. And this is obviously not a get-rich-quick thing, nothing to do with that at all. I mean, but the 2 key statements that you feel will always set a person up for success, in which you had an outstanding run, what would that be?
Wow, always set a person up for success. That's a really hard one. Well, the first thing, of course, is you have to have a methodology that has a positive expectancy. Well, let me put it this way. To me, there are 3 keys for success.
Okay.
Method, you need a positive expectancy method, something that if you execute consistently, it will make money. If your method has a negative expectancy, it doesn't matter. So for example, I'm going to sell the S&Ps when the moon is high. I would assume that that's got a negative expectancy. It doesn't matter how well you execute, that's going to lose money. It doesn't have any basis for reality. The second thing is you have to have money management. You have your position sizing has to be such that you will maximize your profitability and minimize your losses. Now, that's an easy thing to say, but you've got to bear this in mind. They're contradictory. Think about it. If you know that a method, if a next trade, if you knew, Mario, that the next trade is going to be profitable,
Yeah.
how much money would you put on it?
All.
Right? And
But how would you know?
Exactly. If the next trade you know is going to be a loss, how much money would you put on it?
Nothing.
Nothing. So when you come to money management, position sizing, you're looking for a way to minimize your losses and maximize your profitability. And that comes to position sizing. And finally, and the most difficult part, is the winning psychology, the mind. Because we are hardwired to move away from pain and into pleasure. So we won't take our losses and we will take our profits too early. We need to learn to follow our trading rules and follow our money management rules. Now, if you put those 3 things together, that would guarantee success.
So that would be money, mind, and method. You know, I agree with this 100%. And I think I've heard you say this as well. Successful trading is in fact counterintuitive. We like to, as much as we want to avert pain, but we in our actual trading, we tend to let the losses run.
Yeah.
You know, we don't avert that. We don't take the losses. How can someone immediately apply those techniques, bro? I mean, it's very easy to say, you know, like you should be cutting your losses short. Any quick fix to doing that?
I don't think it's a quick fix. One thing that I push if I'm lecturing or if I'm teaching people or mentoring people is to pre-visualize the loss.
Okay.
Before you take the trade.
Think that you're going to lose first.
Well, you got to picture both. Picture the profit, but picture the loss.
Okay.
And accept the loss. Too many people don't accept the loss. They say, oh, I'll put a stop in. They have no idea. They don't really accept that they could lose 1, 2, 3, 4, 5% of the account.
Yes.
I would actually not think in percentage terms in those situations. I would think in dollar terms. So if you're going to lose $200,000, see you taking the loss at $200,000 and make sure it's okay to take that loss.
Okay.
So if it's okay to take the loss, you're more willing to do it when the time comes.
Sure, sure. I like that. Pre-visualization.
Pre-visualization.
Friends, if you have any questions, just either raise your hands or put it into the app. I think there is an app. I'm sorry? Slido. Is it Slido? Did I pronounce it correctly? Right, just type the questions there. Ray, this also being, as John mentioned, you know, a B2B convention. And I do want to add some value to all the partners, the brokers and all that who are here. I mean, everyone is trying to raise their game, right? And you are on the side of it where you are seeing firsthand what's happening on the ground. You're seeing what traders want, what investors want. Now, I'm going to couple these two questions together. Number one, what are you seeing or hearing from your traders in terms of feedback for the brokers of what the brokers can be doing better, and what more can brokers be doing in a sense? Because for want of a better word, many brokers are already providing the stuff like research, education, the different tools, all right? So I know it's a bit of a long-winded thing, but strictly on the question, what feedback are you hearing from your base of students and clients, and how can brokers do better to serve the traders and investors?
Okay, well, let's do the negative side first. One of the things that's coming in, which from my point of view and from my students' point of view, that we don't like, is brokers using the MT4 platform as an execution platform. MT4 is a charting platform. MT5, it's not, to me, an execution platform. It is probably the worst execution platform I have seen. For example, you cannot put a limit order to exit part of your position. So if you got 300,000, you want to exit at a price 100,000, 100,000, 100,000. In the normal MT4, MT5 platform, you can't do it. You got to get a special apps, and it's a bit cumbersome.
For partial exits.
For partial exits on a limit order.
Okay, got it.
Another thing, you can't stop and reverse on an MT4 platform. You got to exit the position you're in and then start a new position. Those sort of the things that we don't like as traders on this tendency to move towards an MT4, MT5 structure. What we're looking for is only two main things. I don't know about the traders in the room, but for me, the two main things are security of funds. I want to know that no matter what happens to the broker, my funds are secure. And we had this experience with Six Capital in Singapore, right? Recently.
Right.
Secondly, I want to be sure that the platform that I'm using executes quickly and efficiently. That's very important from a trading point of view.
Okay.
So we get some platforms. I won't mention names, but we were at a platform, and the guy issues a market order, and it takes forever for the order to come back to say executed.
Okay.
And a couple of times the thing came back and said unable. And I said, wait a minute. He had a limit. He had a limit, market limit.
Yes.
You know what I mean?
Yes.
Limit 10
Sure.
to whatever. But the market wasn't moving that quick. And for them not to be able to execute a well, it was a large order. At least part of the order is unacceptable.
Okay.
So that's what we would like from brokers.
All right. So let me summarize that. We have a question up there. So in terms of what traders and investors want, and this is the lifeblood of literally any brokers or any B2B partners, it is the traders and investors, right? We need the people to be trading in terms of adding value. So I love what Ray said. He essentially talks about the two S's. Number one is the speed of execution on the platform, and number two was the safety of funds.
Yep.
Awesome. Man, how do I look at the question, huh?
How do you see risk-reward ratio?
Hi, Ray. How do you see risk-reward ratio? Is that important in trading as well?
Yeah,
How would you
absolutely.
answer that?
Think about the formula I gave you. Average dollar win multiplied by the win rate minus average dollar loss multiplied by the loss rate. Within that is built the risk-reward ratio you must have in order to succeed. So, for example, let's say your average dollar win is $10 and you have a win rate of 60%. So that's 0.6. And your average dollar loss, make it simple, it would be, say, $2 and it's 0.4, so that's $8, right? So if it's a $10 win, $6, you have a 0.4, $8, is $1.60, sorry. So that gives you a positive expectancy. That's your risk reward that you require in order to get that positive expectancy. If most people, you're going to read about books, oh, you want a 3-to-1 or 2-to-1, or that to me is a starting point when you don't have your stats. Once you have your stats, you need to look at your positive expectancy reward to see what risk-reward ratio should be suitable for you. Now, if you have a high win rate, then you may be able to have a smaller dollar win, smaller dollar average win. If you have a low win rate, then you need a higher average dollar win. And of course, the reverse is true on the loss side. So risk reward is very important, but that's built into the positive expectancy formula.
Well said. Hope you guys got that. Positive expectancy, risk to reward ratio is very important. Question number 2, Ray. Questions are coming in now. Huh? What do you think about trading derivatives on cryptocurrencies?
I'm going to... You really want me to answer that question?
Well, that was the question.
Okay. With respect to the brokers who are in crypto, I wouldn't touch it with a 10-foot pole.
Okay. Reason.
The main thing, think about what I said. I am looking for security of funds. Right now, your crypto industry is so small that you have 2 types of losses that are possible. Your market loss, your inability to make money in the market, and the crypto guy taking your money and running away with it. And we've seen too many brokers disappear with client funds. So as far as I'm concerned, the crypto industry is too young, too immature for me to be putting any money in it.
Okay, but when you say the word immature, do you mean that because there's no liquidity?
No, there is some liquidity.
Okay.
But I'm only meaning in the sense that money just gets stolen.
Okay.
You know, that's just, you know, we had a couple of instances in China, we had a couple of instances in Japan, and so on. So
everywhere.
Everywhere it's happening, and to me, I think crypto will be the future, but too early for me to be putting my hard-earned in it.
Okay. So what you're saying now is that if there was a choice for you to be making money in the financial markets, if you had Forex on one side and crypto on the other side, your choice would be?
Always Forex.
Always Forex. Love it. Any other questions, friends? Anything that you may want to ask now instead of just typing into the app? No? I'm going to continue asking questions. Huh? Now, talk us through a little bit in terms of the macro economy, all right? Because I was watching CNBC last night, a little bit of, you know what's happening in Davos now in Switzerland, the World Economic Forum. So obviously we are hearing the same thing. Oh, bad news is coming. 2019 might be the year of the recession. Christine Lagarde was talking about it. There's this thing about negativity, right? There's a negative cloud in the financial markets. Talk us through a little bit in terms of what you see specifically, because as a trader, you technically don't care whether the markets are doing good or bad. You just take advantage of it. But what are you seeing? Any concrete themes that we can take back and maybe apply it into our own trading or business? Anything at all?
I think that's a little bit hard because of where we are at the moment. I think we are at a cusp where we can actually go either way. And it's all going to depend upon how the U.S. handles their $1 trillion deficit.
Okay.
It's interest rates are going to go up in the U.S. The question is...
It's already going up.
Yeah, but at a faster rate than they can.
Okay.
If you want a tip, I would look at the St. Louis Fed Reserve has an index called the Asset Monetary Base, AMB. What it does, it shows you the amount of money that is deposited by the banks with the St. Louis Fed Reserve. When the, what's the name? Mental block. QE came in. When QE came in, you saw those reserves explode to the upside, which meant, of course, there won't be any inflation because it's not going to Main Street. That's why I don't understand when economists say, oh, how come we don't have any inflation? Because most of the money is either in the stock market or it's in the Federal Reserve. Now, in the last few weeks, because it comes out every fortnight, it went sideways and it has broken down, which means that that money is now going into Main Street.
Okay.
If it continues to go down, we're going to see an inflation rate rise much quicker than we have seen or the Fed expects. Now, I was around when Volcker had to raise his rates.
It's in the 80s.
These in the 80s. We went, I think, in about 6 months or less, we went from about 5 or 6% of Fed fund rate to 18. I was a lawyer at the time in Australia, and our housing boom, which was running well at the time, suddenly our housing rates for banks went to 18%. Now, can you imagine what would happen to the economy if the Fed fund rate did that, simply to stop hyperinflation? I think that's going to be the critical aspect. If they can manage that, and then they can manage the $1 trillion deficit, I think we'll probably have another 18 months of boom.
So you are actively watching the AMB from the St.
I am
Louis
looking
Fed.
at the AMB, Australian Asset Monetary Base, yeah.
Okay.
I look at that every 2 weeks.
Okay. Do you guys catch that? Look at the asset monetary base from the St. Louis Fed. I sound intelligent just interviewing you, man.
You're always intelligent.
One more question. How has Brexit, in brackets, the lack of, affected your trading strategies? Would you recommend going long on the pound?
No. I would not, and that's both technical and both in terms of fundamentals. If you think about what's available, from my point of view, what's available from the Brit exit at the moment, they've got three options: a new election, a new referendum, or a hard Brit exit. A hard Brexit will mean problems for both the European currency and the sterling, no question. Both of those will move down against the other currencies in the world. What amazes me, and it shows you the short-sightedness of politicians, when they say, okay, we're going to have an election. And that assumes that Jeremy Corbyn's going to come in, and suddenly if he comes in, he's going to be able to negotiate a new deal with an EU that has said, we're not giving you a new deal. That's one. More likely than a general election, I think you're going to have another referendum. And again, the assumption there is, we're going to vote to stay in the EU. But what happens if they don't? What happens if the new referendum says, we're going to have to exit the EU. We still want to exit the EU, and that wins. You're back to where you are now. So as far as I'm concerned, the only option available for Britain is a hard Brexit, which means it's going to impact adversely on both the EU currency and the sterling.
So in that sense, would you stay out of the pound, or are you going to short the pound?
Right now, I'm actually short the euro because I think the euro is showing more weakness than the pound.
Okay. You are already short the euro.
I'm already short the euro.
Okay.
Yeah. By the way, if you how many people here trade FX? Do you guys trade FX?
How many trade FX?
Okay. One of the things that you need to input into your trading plan would be some way of determining the strength and currency of the individual pairs. Because there's so many pairs. How are you going to trade? You want to sell the weak and buy the strong. So somewhere in your trading plan has to be a tool that identifies which currency is strong and which currency is weak.
What tool is that for you? You're just like making me ask you that question.
Well,
how do you identify the strength
No,
and
I
weakness?
wasn't, because I would then have to answer it in a way that's not available, which is not my thing.
Okay.
But if you're going to do it, I have a thing called Barros pivots. How many people here know about pivots? You guys know about? If you don't know about pivots, then research, do a Google on pivots. It's a fairly well-known day trading approach. And I amended the formula a little bit, and that pivots, where the market closes and where the market opens in a time frame will help you determine the strength and weakness of a pair.
Got it. One more question that came up. How significant is a web trader platform an advantage that a broker has over other brokerage firms? Maybe from your own personal experience, I'm guessing. Do you trade on a web trader platform kind of thing?
I don't understand the question because I don't see a difference between a web play and a platform that's on the internet that's downloaded to your computer. I don't see a difference between the two.
Okay.
If you're asking me if there's a difference between how I used to trade when I used to ring the broker by phone and the web platforms, then of course there are.
Man, I mean, you have seen through all of that, man. You did that through the phone, there were orders that were executed over the phone, and now you're doing it on the platform. So essentially, no real difference. I think the key thing, what Ray may be saying is get yourselves involved, research first, and then be in a position to do what you know.
Yeah.
Because even though if the Brexit's coming or interest rates are skyrocketing, it makes no one any real impact if they're not taking action.
Exactly.
Okay, cool. Any other questions? Anything came up?
Okay, can I ask a question of the crowd?
Of course you can.
How many guys here trade? Would you be willing to tell me? Okay. So what has to happen for you to take your trading to the next level?
What a brilliant question. What has to happen to take your trading to the next level? But can I just interject a bit? How would they know what they need if they don't know what they don't know.
But I think most traders know what's wrong with their trading. They just haven't defined the next action. At least my experiences in the education that I do,
Okay.
when we go through and talk to students, they know what the problem is.
Okay, that's a great question. I mean, I can't tell you what's wrong with me. In my view, I'm perfect, but if you speak to my wife, you get a
That's
whole
whole different
list. Man.
ballgame.
Do you guys, so I mean, it's a great question from Ray. What do you think you need to bring your trading to the next level?
Yeah, what do you need to do? The key word there is do. What behavior do you need to bring into your trading that will take it to the next level? So if you're not making money, if you're among the 90%, what action do you have to take to start losing or to start making? If you're already making money, and let's say you're making 5 or 10%, what action do you have to take that will bring it to 15? And if you honestly don't know the answer to that question, I would stop trading until you found out the answer. Because if you keep doing the same thing over and over again, you're going to get exactly the same result, right?
Wonderful statement. You put them in a thinking mode now. Do you guys know what you need to do to go to the next level? How many of you know? Raise your hands. How many have no idea? Raise your hands.
I can't tell you because I don't know your trading problem. I'm sorry, I can't hear.
He says he has many ideas,
Yeah.
but he wants you to tell him what he needs to do.
But I can't tell him that unless I know his problem.
He can't tell you that, bro, unless he knows your problem. He's enlightened already.
Yeah, absolutely. Grab me afterwards, and if you want some suggestions, I'm happy to do that.
Okay, before we wrap, I have to ask you this question, yeah. Ray, just talk us through this one word called success, where everybody is chasing it, right? Tell me, in all your years of experience, I mean, you were in the shits, you were in the pits, you came back up, you built 20 million to almost $1 billion, which is amazing. What are some of your nuggets of success? And I'm keeping it open-ended, meaning to say there is definitely a set of rules that you go through that has given you success, both in your trading world, your business world, your marriage life. You know this to be true, that there are certain success principles that you adhere to. What are those? Pass on some of these things that they can take and build a great life, man.
Well, I won't speak about how you can build a great life. That's not my area of expertise. Let's just keep it to trading. I think you need, as I said, you need self-honesty, you need self-awareness. I think they're
Yes.
absolutely key components.
Yes.
I'm also a big believer in knowing where you want to go, what it is you want, and why you want to get there. So, for example, if you want trading success, what does trading success mean to you? It just can't be dollars, because a dollar is just a value, a measurement of value. What is the dollar going to bring you? How is it going to change your life so that you want that? Why do you want trading and not internet or a lawyer or a doctor, right? So understanding where you want to go and why you want to get there is important. So that's step one. And step two is make concrete plans on how to get there.
Make a plan on how to get there.
Yep.
Why did you want to get into trading?
Why I wanted to get into trading was because I hated the life as a lawyer.
Okay.
Really, it was a way, I mean, I got into law because Dad expected me to get into law. So as soon as he passed away, I was out of there like a flash, and I just happened to find trading as something that I'm passionate about.
Okay. There are tons of lawyers in Hong Kong, I heard.
A lot.
Okay. We'll leave it at that. Questions are now all coming in, man. Louis is asking, the US and China have until 1st of March to reach a concrete deal to end the trade war. Who do you think is the biggest loser if the trade war continues to drag on?
I don't know. I can't answer that question. They're both going to lose. Trade wars never win. And I wouldn't expect too much about this end of March meeting. They're very far apart. At best, you're going to get some cosmetic changes. Hopefully, what they'll do is lay out a plan for future dialogue.
Okay, cool. Copy trading and machine trading. Legit passive income or scam?
That depends on who you're following. I mean, right? I mean, for example, if I had, Mario is going to get Warren Buffett for a copy trading, how many people here would not go there? Yeah, I'd be the first one in, right? So it just depends on who you're following. But if you are going to follow it, the one proviso I would add is make sure you understand the position sizing for that trader. I have seen a lot of copy traders where the position sizing for the trader might be a 1 or 2% risk, and the trader or the investor is doing a 20% risk. If you do that, you're not going to, it doesn't matter how well the trader is doing, you're still going to blow your account. So copy trading, I think, is reasonable, depending upon who's doing the trading. And secondly, make sure you understand the risk management rules that he's applying and you apply to your own account.
Great advice. Because I think, especially in Asia, many people are interested in the copy trading things, right? And they always tend to jump in on the people that has the highest amount of the rate of return without even going to the back and understanding who is this person, what is his position sizing, what is his credibility. So I think you hit the nail on the head.
Can I just add one thing?
Yes.
Because you just jogged my memory, and I think this is an important bit of advice. I would not follow someone who has made a lot of money in a very short time. I would stand back and just see how it develops over time, because remember that he could just be going through a flow stage, and that could be lost tomorrow. So what you want to see is some consistency. What I'm would be more looking at is, say, for example, someone's got 7 trades, 6 losers and 1 winner, and he's still up 2%. That's the trader I would want to follow.
Okay, but here's a little but now. When I interviewed you for the book, and if I recall in 2010, you had an outstanding year.
Yeah, but that
you did 3 triple-digit returns for your fund.
That was a flow stage, which is the reason I stopped the hedge fund in 2010. For those of you that don't know, I had been in a hedge fund from 1990 to 2010, and I stopped it in 2010. 2010, I had an over 100% return. And I said to myself, I'm never going to duplicate this. Dad always taught me to stop at the top, which is exactly what I did. I recognized that I was never ever going to do that again, or not likely. And I haven't. It's been 8 years, and I'm not even trying to get a triple-digit return.
You know who else has stopped at the top?
Who?
Mackenzie Bezos.
Yes, yes.
Yeah, she sold at the right time, man, bro.
She did.
IMF downgraded global growth, and due to the US deficit, is the US dollar still a safe haven? Or might it be other currencies such as the yen and the euro?
Okay. I'm going to answer this question in this way. I do a lot of reading. There's a great book called Blood in the Streets.
Blood in the Streets.
Yeah. It's a very old book. Lord Rees-Mogg wrote it. He's dead, but I can't remember the other English author. What he said was, when someone has control of military power, the world remains in a fairly safe condition. When that deteriorates, when everybody gets the same, you lose that monopoly, then what happens is currencies and economies of the world start to deteriorate, and you get a lot of fluctuation, ups and downs, and so on. I think we're in that phase here. The American empire is in a state of flux and deterioration. So I think what's going to happen is you're going to see a lot of currencies move up and down. So is the U.S. going to be the safe harbor? At times it will be, and other times it won't be. What will be important to see is what is the next currency coming up. At this stage, you'd have to say, if they can free up the economy, it'll be the Chinese renminbi, right? But we need to see how much degree of freedom they're going to give them.
But prior to that, I mean, who knows when they are finally going to open up? Would it be the Japanese yen, you think?
I don't know. I think currencies are going to fluctuate up and down. So more than ever, if you're trading Forex, you need to know buy the strong or sell the weak at the time. Because I don't think you can now count on a currency continuing to accelerate to the upside.
Sure, sure. Well, there's a question called, how do I attend your class? But I think for the person who asked that, maybe you can just have a private chat with Ray on the side. So what should we do now? What's your tip? What's your final tip for us to all leave here with with something? I mean, you give a ton of value, man. But
Okay.
What's your final tip?
The final tip I'd like to give you, and every time I give this tip, if there are 300 people in the room, 299 won't follow it. Okay. If you're a trader, there are two kinds of journals you have to keep. You have to keep an equity journal, which is basically a spreadsheet, and there are tons out there. By the way, there's a thing called, and I'm not affiliated with them, but I think they're good value. It's about 147 US, called EdgeWonk. And for what it does, the 147 is fantastic value. It's an equity spreadsheet. You put in your trades. You can ask, okay, what rules made profits? What exits made profits? What times of the year am I not profitable? What times of the year am I profitable? So that's one. The second thing is you want to keep your psych journal. You want to keep a journal that identifies those conditions when you will trade well and those conditions when you won't. Now, I'm going to tell you a story which is absolutely true. I was mentoring a student, and he wasn't keeping a journal, and after 6 months we found, and he's a day trader, we found that every time he had a fight with his wife, he would make money.
He would make
money.
Man, it's the other way around.
That's what you think, right? It's counterintuitive. And when he looked at it and considered it, when he was so angry with his wife, his attitude was, I will show you. And then he would keep to his rules. So I said, okay, what can you do to keep your rules without fighting with your wife? And that's a whole different story.
So if we haven't found the answer, are you telling us to go back home and fight with our spouses more?
Absolutely not. I'm telling you to keep some journals.
That was a wonderful session by Let's give Ray a big hand.
Thank you. Thank you very much. It was indeed insightful, both hands-on and visionary.